Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Tom Keene, along with Paul Sweeney. Join us each day for insight from the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.
Brooke Sutherland, she is a Bloomberg Opinion column. She covers the industrials for Bloomberg Opinion. So, Brooke, this feels like really big news for our friends at Boeing. What does it mean to you when you see such a management shakeup here for Boeing?
It's definitely big news. I mean, I would say perhaps overdue big news, but it's important that they're making the change now, and it signals that I think they're giving the message that this needs to be deeper rooted cultural change at Boeing and really get to the bottom of what's been driving these manufacturing glitches, this series of problems that have been plaguing the commercial airplanes division, and to see them make a change not just at the top but also at the head of the commercial airplane division signals that they're really trying to do an overhaul here, and it's about time, but they're doing it now.
So, Brooke, is there a feeling, again, this story here, this quality story, we're now several months into this year with a little bit of hindsight. Did we have any sense to what changed over the last maybe 6 to 12 months of this company versus the last, 50 years?
I mean, I do think it's been notable, the public criticism that's been coming out of their airline customers. I mean, certainly there was a lot of that in the wake of the 737 MAX crashes and the grounding of that airplane, but not to the degree that we have seen in the wake of these recent quality control issues. And I think it's just been striking the level of criticism that we've seen directed at Boeing and its management team. And there were reports late last week that those airline customers had actually asked for a meeting with the Boeing board directly without CEO Dave Calhoun. And I think that was an important signal.
Right. How do you color a finance person with 3 decades of experience, Stephanie Pope, coming in? But critically to me, the key announcement, Brooke, is Steve Mollenkopf of Qualcomm with an electrical engineering background, Virginia Tech. You know, he's steeped in the engineering processes that are discussed here. What will he do? What's not day one for Steve Mollenkopf as the new chairman, but what the tone that he has to shift?
I think, job number one is figuring out who you hire to be the ultimate CEO. And I think it has to be somebody with, an engineer's mindset toward manufacturing. And you really need somebody who's going to drill into every single process and root out defects and just improve the way that Boeing works. And I don't think this is a situation where you bring in, a complete outsider CEO from the auto industry or healthcare or whatever it might be. It needs to be somebody who really knows manufacturing. And frankly, you need somebody like Larry Culp at GE, but I don't know that he would want to take his job.
I'm loving this. And Paul,
I'm
just teasing Brooke here because I got to go to Kansas here. Mm-hmm. This job was built for Alan Mulally. Kansas Aeronautics. Brooke knows this, but Lawrence Culp, Alan Mulally are the kind of engineering process guys that this job begs for.
So, Brooke, is there a sense that Boeing can, to lack of a better word, fix their weaknesses, their deficiencies in the manufacturing process within any reasonable amount of time? Or is this kind of a, multi-quarter, maybe multi-year kind of thing? Do we have any sense as to the magnitude?
I think it probably does take a while. And I always go back to GE as an example just because, it's a company close to my heart, but also there's a lot of similarities between these two companies and their cultures, given that a lot of former GE executives were in the top ranks of management at Boeing. And I think, to really drill down into every single detail of the manufacturing process and to do it right does take time. And you need to completely rewire how you work and train the staff there. It's a cultural shift. You need to teach people to feel comfortable, to feel transparent about pointing out defects, before you have a situation like a mid-air blowout on Alaska Airlines. And that does take time. It's not just a switch that you can flip. It's not a switch that gets flipped just by the CEO stepping down.
Right. When you write your 400-page book on this, Brooke, I know the movie rights have already been sold. Did the pandemic cause this? Was there a pandemic breakdown as with other manufacturing companies because of illness, people in, people out, whatever? You've alluded to this before. Is there a big asterisk next to all this? It's not Calhoun's fault. It was the pandemic's fault.
No, I mean, I think the pandemic is exacerbated things, but I mean, the 737 MAX crisis happened before the pandemic. Yeah. And I think that, if you want to talk about cultural issues at Boeing, you've got to go back, almost to the late 1990s and the merger with McDonnell Douglas. But also, the Partnering for Success program where they squeezed margins out of their suppliers. And I think this is sort of a long running cultural issue at Boeing. But I do think, COVID certainly took its toll, and probably more so on the supply chain, who already had their profit margins squeezed, to then have to go through the volatility of the pandemic and the layoff.
Julie Johnson, ex-Chicago Tribune, giving us great leadership out of Chicago here on aviation. Brooke Sutherland, to Julie Johnson's heritage here, did this company never make the leap from Seattle to Chicago?
I think that, it certainly didn't help to have management not be in the same vicinity as the manufacturing factory. And they've since even moved the factory again to Arlington, Virginia, moved the headquarters again to Arlington, Virginia, which is even further away from Seattle, which I don't think was the right message to send or the right mindset to have when, your sort of bread and butter is this commercial airplanes division that's having manufacturing
I think the Brooke Sutherland book here is up to 500 pages.
Oh, I know. I mean
that's
there's a million ways to go.
I'm serious. We got Brooke's got a schedule. We got to leave her now. Brooke Sutherland, thank you so much from Boston joining us today and her true expertise on America's manufacturing process. One of the great truisms of Bloomberg surveillance, Paul and I will steal from anyone we can. And we do that all the time. And right now with Ann Sonders, Chief Investment Strategist at Charles Scwhab, it's an over-hour conversation. Barry Ritholtz, Masters in Business, with Ann Sonders. And all I got to say, folks, if you want to know where you need to be in the market, just trust me, get incredible perspective that only Barry Ritholtz can bring to it. With Miss Sonders. And Ann, Barry had one question, which I just thought was it was just brilliant. I had tears in my eyes. Oh my God, this is a question I would never ask. So I'm stealing from Ritholtz, Ann, and it's simple. You've been at Schwab forever. You and I saw what Schwab invented. He's older. He's moving on. But the answer is Schwab continues with core values. What are those core values that have kept you at Schwab all these years?
Well, we have it as, I guess, for lack of a better word, our tagline, but it's what we live, eat, and breathe every day, which is through clients' eyes. And having almost $9 trillion, essentially all individual investors, what is important to them is quite different from what is important, say, to an institutional community. So we always think of everything we do from the perspective of the individual investor.
Do the individual investors show exuberance right now?
A little bit, yes. I'd say the sentiment data more broadly is I guess on the frothier end of the spectrum. Certainly attitudinal measures of sentiment, maybe a little bit less so behavioral measures of sentiment. I think it's important to understand which indicators fall in which bucket, and it's almost necessity for it to be a contrarian indicator to see it in both categories, which we're not quite seeing it in both of those, but it's on the frothier end of the spectrum. The most important thing I would say, though, is sentiment. Not that anything's a good market timing indicator. Sentiment is a terrible market timing indicator. We can get frothy sentiment and it can stay there for years, as we all learned in the late 1990s. So it's more of a backdrop.
Ann, we had a bunch of central banks speaking and issuing announcements last week. And let's just start with the Federal Reserve. Probably came out a little bit less hawkish, I guess is a right way to frame it, than maybe investors were discounting going into it. What did you take away?
So it was definitely on the more dovish end of the spectrum, particularly as it relates to the dots and the expectation heading into the meeting that we might see one of the three rate cuts come out of expectations per the dots. But I think what's more important is Powell continuing to push back on the notion that the dots represent some sort of policy path. They don't, they never have. And certainly in an environment where the Fed is data dependent and not on any kind of preset course, if the data changes, I think their perspective and things like probabilities in terms of the Fed funds future market could change. So at that moment in time, it was slightly more dovish, but the combination of their dual mandates I think has to continue to behave, or in the case of inflation, actually roll back over and start moving down again for rate cuts to start as soon as the June FOMC meeting.
So given that backdrop, Lizanne, have you guys altered kind of your allocation here? Stocks, bonds, maybe alternatives? What's the Schwab call these days? Maybe how has it changed over the last several months?
So we don't play the short-term sort of tactical asset allocation game by saying, above or below or percentages, because again, almost $9 trillion of client assets, what might be right for, some 25-year-old aggressive investor that inherited $10 million from their grandparents and doesn't need the money versus say a, 75-year-old who is retired and needs to earn income on a nest egg that they can't afford to lose any component of. So entirely two different messages there. What we have continued to do, though, is focus on factors, even a little bit more than sectors. And we still think you want to stay up in quality. Momentum has been a dominant factor, but what's interesting is that's more of a concept than a factor. Momentum just says, it just says that stocks that have been working continue to work. Right. What you can do, though, because a lot of comparisons are being made to the late 90s, momentum as a factor is doing well right now. That's the same thing happened in the 90s. But the actual fundamental factor that was most highly correlated to momentum in the late 90s was negative earnings. The factor right now most positively correlated to momentum are factors like high return on equity, strong free cash flow, and a negative correlation right now is negative earnings. So momentum is just a concept, but you then have to look at what are the fundamentals of the types of stocks that continue to do well. And I think that's an important differentiation. But in essence, it's high quality other factors that are dominating in terms of momentum. And that is what we say you want to stick with right now. Stay up in quality. This is not the time to go down the quality spectrum.
What you just heard there, folks, as far as I'm concerned, is gospel. I don't even know where to go with this. This momentum stuff, Lizanne, I'm aging listening to the certitude of young Turks telling me momentum is a Steve Ross factor concept. You say quality matters. Are we going to get earnings to deliver Q1, Q2, Q3 to develop that free cash flow of quality?
I think earnings estimates on a forward-looking basis maybe have some legitimacy, but probably only out a quarter or two. What we've seen in this sort of pandemic era, not as extreme as was the case a couple of years ago when you had a record percentage of companies that just withdrew guidance altogether. So estimates just became a total, dart throw because companies were saying, we have no idea, we're not going to try to guide. I think a lot of companies are using the environment as an excuse not to go back to the kind of precise quarterly guidance. What that's left analysts to do is go into earnings season where lately they've been setting the bar too low, listening to what companies are saying, maybe make adjustments out a quarter or two, but then sort of leave, 3 quarters, 4 quarters, the following calendar year aside until they get more concrete information. So I think there's probably some validity to first half estimates. I'm not sure how much is based in reality on later out estimates.
This was brilliant. Lizanne, too short a visit. Thank you so much. Lizanne Sonders with Charles Scwhab there on factors and maybe an overwrought comment on momentum. Joining us now with leadership on courage to stay in the market and with an upgrade on his earnings and S&P call, Jon Stoltzfus from Oppenheimer today. In the feardom of 2 Octobers ago, the afeared moment of an October ago, Jon Stoltzfus, how did you not go to cash?
Simple reason is, Tom, that when we looked at things, we looked at the overall trends And we thought that the calls that were essentially a bearish pitch book were just not accurate. They were based on near-term trading. When we saw what the situation was in terms of the corporate resilience, the consumer's stance, and where the Fed was being effectively very much sensitive to applying its mandate to inflation that was at untoward levels, we couldn't help but think we'd rather stay in the market rather than try to time the market, recognizing that time in the market historically has shown to be a good way to get better returns over the intermediate to longer term.
So the Bloomberg reporting of your call here this morning, John, Oppenheimer asset management lists S&P 500 target to Wall Street high of 5,500. What's driving that? Is that earnings driven? Is that Fed?
It's certainly a mix of both. It certainly is earnings driven. If you consider third quarter and fourth quarter S&P 500 earnings really surprised very nicely to the upside. In addition, if you look at GDP and you reflect on Fed policy, the Fed has been remarkable with 11 hikes and 6 pauses or skips as they call them now, has not pushed the economy into a recession. And then beyond that, the fact that what we believe is, and it's interesting, you just had George Ball on, and you all spoke about investors and retirement and things like that at one point. It's today 2 generations and more than that, the younger ones that follow the millennials, but the millennials and the boomers recognize the fact that Social Security is likely not to be what it once was as a core to retirement for prior generations over the decades. And in addition to that, the recognition that they will likely live longer. And so whether preparing for retirement or in retirement, there's a need for equities. Equities historically, again, with past performance, no guarantee of future results, as we always say. But equities tend to be a better place for intermediate to long-term investing and diversification. Okay. Paul's in our view.
I mean, Paul's living this. I mean, John, you and I have to work every day. Sweeney could have retired 14 years ago. But the bottom line here, Paul Sweeney, is when was the last time bonds made a return?
Yeah.
And I mean, I'm talking, you're back 5 years, 7 years or whatever.
John, it's interesting. It's, Tom was just mentioning, you think about the fixed income space just got crushed in 2022. And thanks to a miraculous November, December, they eked out some gains last year. But in the equity markets, I guess the question for a lot of folks is, where do I go here? Do I follow the Magnificent 7 or 5 or whatever they are today? Or do I try to find some value in other parts of the market? Where are you at this part of the stage?
Great question, Paul. We think you have to mix and match, which really means diversification. And by that we mean we emphasize cyclicals over defensives, but still want some defensive in there for higher yielding dividends. Growthier value for companies that grow their dividends, and still want growth because the innovation points to the very clear fact that much more sophisticated technology that we have today versus where we were when the tech bubble happened. And being 40 years in this business, I can well remember the tech bubble, which is not that long ago. This is an environment where technology keeps morphing, and it can very well help all the sectors, including both itself, technology and communication services, which is over 50%, about 60, 70% technology, but all the others help companies become more efficient, help consumers be more efficient in approaching their relationship, business as well as each other.
I mean, the question here, and a broader question, folks, and I'm showing my age. We're talking to George Ball, who was iconic, and so was John Stoltzfus. John Stoltzfus was at Ticonderoga Securities. Yeah. I remember that. I do too. The romance of Ticonderoga Securities. And what I really remember, John Stoltzfus, is a guy named Myron Picot, who's at OpCo, and literally taught me individual line item for accounting statements, securities analysis. I mean, Myron owned the high ground. Can we get, as I said to Mr. Ball, can we get back to where people actually are riveted by individual security ownership, or is that just a time gone by?
I think if anything, ironically, ETFs bring them back to the thought of the need for diversification in approach. We like alpha beta, for example. So alpha would be individual security selection or individual stock selection, looking for alpha picks in combination with strategically allocated and tactically weighted ETFs that track passive indices. And that way, if you're in the right church but in the wrong pew, you're okay. Or if you're in the wrong church but in the right pew, you can also be okay. It gives you more opportunity, we think, via diversification of approach to the markets. And we think people want to be that thoughtful, and we think the financial media calls for that in many ways, because most of the day is spent highlighting individual stocks and not ETFs, but the benchmarks are looked at for certain. But it's alpha beta. We think you don't have to be a kid to have to know your alpha beta. That's what we like to say. From
5,000 to 5,200, Jon Stoltzfus lifting up here on earnings, and you wonder where he'll be 6 months out or 8 months out. Jon Stoltzfus, folks, I'm just simple as I can. I said this of Gina Martin Adams. You got to be in the market. You can't time it. You can't go to cash. You'll never make it. I've lived it. Jon Stoltzfus with the courage to be in the market. He is with OpCo. You're taking a look at the front pages around the world. Lisa, I missed this. I was reading Le Mans. I had a jeton and a beret. I'm in a cafe. Okay, I'm reading Le Mans English. I'm sorry. I'm not reading Le Mans French. And I'm thinking, the newspapers we could have out of France. What do you got today?
All right. This is the big debate in the housing market, because you remember the National Association of Realtors, that class action settlement. Well, you had President Biden, who said the deal could save home buyers, sellers as much as $10,000. But experts are saying that the true benefits, they're really not clear, especially those first-time buyers who need help the most. So this is that back and forth kind of a discussion going on right now.
It was amazing, Paul, to see the government support of housing in France versus the mess we have here. All the houses look the same. I mean, it's scary how it's just, there's one contractor, one look, miles and miles, took the train up to Rouen. Nice. The whole thing is build out houses supported by the government. They do it exactly opposite of the chaos we have. I mean,
but the national, chaos. Okay, so we are going to get some savings, but we're just not sure how much and when.
That's the thing, yeah, because they're saying, it could be up to $10,000, but experts are saying, you know what, nope. They're saying the NAR actually says real estate agent commissions are driven by the market and are not the cause of the affordability crisis, so that's kind of the back and forth there. Mm-hmm. All right, so we also have the AI boom, right? Everybody's talking about AI. But there is a Caribbean island who is making millions of dollars. This is an unlikely thing.
Thank you. Yeah.
Yes. Okay. So, Anguilla, or I say Anguilla. I'm not sure how the correct way to say it. Anguilla. There you go.
We're British. Yeah.
Okay. Yes, the British territory, just to the east of Puerto Rico. That's where it is. So it collects a fee from every registration for internet addresses that end in .ai, which is the domain name that's assigned to the island.
Cute.
So you get it. So you have all these companies who want these, domain names to show that they're on the forefront of AI. So they want the .ai. So how much are they getting? So each registration, Anguilla's government gets anywhere from $140 to thousands of dollars from website names that are sold over at auctions. Last year, their government made about $32 million from those fees. That's more than 10% of their gross domestic product.
Just for being AI.
Just for being the .ai. So you see kind of the need and how people are asking for it, and they want to be associated with it.
Next.
All right. Jack Daniels. People are not drinking enough of it, and that's the problem. So demand actually for Jack Daniels Old No. 7 has been falling for months. The company behind it, Brown-Forman, they're forecasting sluggish U.S. whiskey business for at least the next year.
Is there a why?
Well, here's the reason why.
Tough comps.
Yeah, exactly. So drinkers liked it there during the pandemic. They're saying the party's over. They're saying people are kind of cutting back on alcohol. Maybe they're getting a little bit healthier. They're switching to marijuana instead of drinking heavily. That's another thing. They're spending less time at home. They're going out a little bit more, but they're spending less. So they want the cheaper canned cocktails, maybe some tequila instead of the more expensive
going on here.
Jack Daniels.
You and
your White Claws.
White Claw.
Yes.
And the rest, I can't keep track of them.
No.
Okay.
I go into the store and it's a wall. Like if the wall fell over, people would die.
Yeah, all the White Claws and all the silly things.
The White Claws, the High Noons, they're
The
cheaper.
High Noons,
Yeah. You don't get the same buzz effect, but it tastes good.
Okay.
All
right.
And finally,
you can use.
This is honor of you, Tom, coming back from Paris. You missed it. On Sunday, there was a race there. It was a race that hasn't happened in over a decade, but it's when the waiters get out. There was about 200 men and women, and they race for about a mile holding trays of croissants and coffee and water. And they race around. They were short on a budget, but they decided to bring it back because the Paris Olympics is coming, and they want to kind of promote everything going out there with the cafes and promote everyone to come out. So that's why they brought it back.
It's really interesting. It is a Paris bubble. It is a tourist outpost, and the restaurants are packed. They're very different on a salary structure. You get the whole feeling everybody's making a legitimate living, unlike the struggle to make it in New York City. But
you can see signs are gearing up for the Olympics.
Oh, huge. And it's all getting spruced up. And I have to say, it is hugely emotional still to see the Cathedral of Notre Dame.
Oh, yeah. Where are we?
We're racing to get it done, and I have no idea where it is, but they really have made some headway.
Is it open to the public, or are they still under
construction?
construction?
No. We were actually going to go to the service on Sunday, and there's no services still.
Okay.
But they're clearly... I can't believe they're going to get there by the summer, but maybe they'll get part of it open. But, it actually, Ben Smith of Air France did a wonderful interview I listened to over the weekend, and he says they completely guessed wrong on tourism. It is fully back and fully past 2019 levels, and it's great. And can we just have the train service they have? That's all I want. I just want the trains of France. I don't want the Red Sox to win. Whatever. Just give me this. Anything else, Lisa?
That is it. That was in honor of you. That last one.
Who do you like in the NCAA?
NCAA, I don't know. See, my husband is a big North Carolina fan. Sorry. I know. He's a big Michael Jordan fan, so that's the reason why. So our household is big that. I was pushing for Connecticut. I mean, hey, Rutgers didn't even make it.
Who does The Rock like? Do we know who The Rock likes?
We don't.
Okay, let's find that out. Lisa Mateo with the newspapers today. I get The Rock. Miami's not in this. That's where The Rock.
No.
This is the Bloomberg Surveillance Podcast, bringing you the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.